Thanks for tuning into the video. Let's talk about a plan for you to check 10 grand. And when I say check, what I mean is for you to make 10 grand out of the market over the next 12 months. So we're right now in the month of September. So that's from now to the next month of September. And what you're normally going to need to do that, in my opinion, is you're going to have to find a company where you understand the direction that the company is taking, whether that's going to be to the upside or the downside. What you don't want is a scenario where a company's just going to trade sideways for an extended period of time. An extended period of time would mean, let's say 4, 5, 6 months just trading sideways in a very, very tight range. Now, when I explain this to you, first, there's no guarantee that this can work the way you want it to work. Everything that we're doing in the markets, we're putting our money at risk, right? Similar to where you get on the highway, there's a risk that you won't make it. We're used to putting our life at risk on the highway system, but we're not necessarily used to putting our money at risk in the markets, especially in the area of trading. So let's go ahead and talk about this real quick. No guarantee you're going to be able to make 10,000 over the next 12 months, but I'm going to show you how I would look to do it on a ticker that I'm currently trading. Then we're going to kind of expand from there. I'll make this real quick. The expanded lessons kind of around this particular concept dealing with these tickers, it's going to be in the Megalodon course. We'll probably do that video on Tuesday. If you miss it, you still get it on the archive because you got access to that tier of videos. But we're going to kind of touch on it really quickly here, right? So we're looking at Cracker Barrel. And Cracker Barrel is what I call a quick serve restaurant. They're not really doing that well. So if you look at their 5-year chart, this is them over the last 5 years. Okay, so they've been selling down from 180 since 21. So again, one of the ways in which you're going to make yourself successful as a trader is you're going to learn how to cut through the noise and just really see what's out there. And until you kind of develop that skill, that's one of the skills you got to develop, you're going to struggle in these markets. If your analysis is 100% based on what somebody else told you, well, what if they're wrong? If you buy into that this company's not doing well over decisions that they made over the past 12 to 24 months, it's obvious that you have not looked at a 5-year chart. So you're automatically telling me if you start talking about what this company did over the past 12 to 24 months, and that's the reason why they're doing bad, I know immediately that you have not looked at a 5-year chart. So that's one of the things you really got to understand is how can you understand what's going on around you without being 100% dependent upon somebody else to tell you. What is your ability to analyze the situation? We're going to get a little bit deeper into that. So this company's been doing bad for the last 5 years. We know that for a fact. Go look at their all-time chart. The highest they've ever gotten was 180. That was 2018. This is the pandemic. They worked themselves up out of the pandemic and they sold them automatically back down. Okay, so we know 180 is their all-time high. This is the pandemic. They came out of that, sold all the way back down. So here in 21 at 180, sold all the way back down. So they've been doing bad for around 4.5 to let's say 5 years. They've been doing really bad. Okay, so it wasn't something that just happened over the past 12 to 24 months. It didn't happen just because they got a new CEO. This has been going on for an extended period of time. That's going to be in the chart. That you can look at their monthly stock price. This is all data that you can use to tell the story if you go do the research. So that's the most important thing, is your ability to go do the research. See, so the $10,000 is not just going to show up. There's work that you're going to have to put in, but you're developing the skills to be able to do this in different scenarios once you understand a framework of how to do it the first time, and then you keep doing it over and over again. Right, so that's the first thing, right? So we're looking at this particular company. They're not really doing that well. Again, I'm going to get a little bit deeper into why I think some of these quick serve operations are not going to work in the future. That's going to be on the Megalodon level, but they're not doing that well. Okay? So my narrative is that they won't do better. That's my narrative. My narrative currently right now that I'm operating under, that I'm trading under, is that it's not going to get better for them. They're right now trading at around, 45? I believe we probably won't stop seeing selling off until maybe they get into the 20s if they're lucky. It's just going to take time. So to me, there's a lot more meat on the bone for this particular ticker. And so that's why I like this situation. I think this presents a really, really good opportunity. And because a lot of people are not over here, I'm not getting a lot of massive volatility on the contracts. It's not a meme stock. Everybody and their mother's not trying to play it. So to me, it creates a really, really good opportunity because there's not a lot of people. It's not a really crowded trade to the downside, right? Because once everybody jumps to one side of the trade is pretty much over. Here's something that you want to understand as we try to get 10,000 over the next 12 months. We need to create multiple scenarios of how it can go. Second thing you want to learn as a trader, you can't just have one scenario. The average person in society, they think something's going to go one way. So they either with the mainstream narrative or they have a contrarian narrative that they've been given by somebody else. And that's the extent of how they can perceive a scenario. There's a lot of different scenarios. So let's say the scenario that I'm currently operating under is that revenues will continue to compress. They're not going to be successful in their repositioning themselves in the market. That won't work. And revenues will continue to compress. They'll continue to get a decline in revenues. And as a result, the share price will continue to go down. Now, here's what could happen. They could fire the current CEO. That'll create a boost in the stock. They may be able to, that's the second scenario. They can fire the CEO, that can create a boost in the stock because now we got a new CEO. They're going to come up with a new plan. They're going to inspire people that, hey, we're going to create a new scenario, and then everything is going to go back up in anticipation of the new plan. Okay, that's the second scenario. Third scenario could be that they just figure out this repositioning themselves in the market, like it actually works. That's the third scenario. Fourth scenario could be they're able to cut some type of deal, some type of way with, I don't know, whoever, and as a result, they're able to drive in more revenue. So I will say, hey, let me get 2 or 3 or maybe 4 scenarios that this situation could potentially go in so I can understand what's potentially on the table for me as a trader in this situation. Because anything can happen. You know, anything can happen with any ticker at any given time. But I wouldn't just go in saying, well, because I'm bearish on it, the only thing I can see is the bearish narrative, because it doesn't have to go that way. So that's what I'm trying to help you understand, is that as a trader, I would look to try to figure out, here's multiple ways in which I can look at this situation. And what I want to do is not get married to one scenario, because once I really learn and understand this company, understand why I'm so bearish on it, by doing research, listening to earnings calls, looking at their revenue statements, understanding what's going on with it from a fundamental standpoint, I get so good at understanding it, even if it starts to go up, I can play it to the upside. So currently right now, I'm playing it to the downside, but I could potentially play it to the upside if they can turn it around, because why? I understand what the upside narrative is. We're on NASDAQ.com, and we're looking at their earnings. So the dark blue is going to be estimated. The light blue is going to be reported. And we see that they beat Q1 2025, right? But they just really, really low estimates. Low estimates here. They beat, right? Right here, they did not beat, but it was kind of little in line, but they did not beat. And then right now, they're estimating a negative earnings per share. So this should be easy for them to beat, but they may not beat it. But it should be easy for them to beat, because this is kind of like saying, I'm going to get an F, so if I get a D, I did better than what I thought. Then Q1 2026, this is, I guess, when all of the repositioning of themselves in the market should have taken place. Now they're estimating a 1.116, and we got to see how it goes. But what can happen is they could report so badly here that they readjust or adjust their guidance for Q1 2026. So what I want you to understand is that they're not estimating over the next quarter to do really well. It makes it easy for them to beat. What we're looking for is, as time continues to go on, for the situation to not improve itself, for it to get worse and worse and worse over time. And one of the ways in which I'm looking to see that is I'm looking to see revenues decline over time. That's what I'm looking for. Again, there's a lot of different things that can happen. However, I don't see the scenario being able to repair itself. They have a lot of institutional buy-in. If that changes, that could create a big sell-off in the stock. And that's kind of what we want to look for. Another example, right, even though I'm not trading this particular ticker, that you can kind of ride for an extended period of time is Sweet Green. A Sweet Green is reporting negative earnings per share going out to 2026. This is a really, really weak company. They're really not doing well. At one time, Sweet Green was trading at $44 a share. This was in 24. I remember when they IPO'd. So they IPO'd at around 50, sold all the way down. So that $44 a share is around their high after IPO. They haven't really been around that long. I think they're on their way out of here. And you see that they're estimating negative earnings per share every quarter. This is another ticker that potentially could be traded for an extended period of time. I don't try to trade things under $10, but those are just my rules. Everybody could do something different. But this is also not a ticker that a lot of people are on. It doesn't really get a lot of activity. So it's not going to be a really crowded trade. But to me, what I would encourage people to start thinking about getting good at is, can I find an opportunity that I can milk for an extended period of time? And I think that's where a lot of people struggle, where they're jumping in and out with this type of trade. And this is why we're trying to help out retail traders. There's not going to be activity to do every day. Therefore, for a person that's really busy, got kids, got a full-time job, yada, 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 this Cracker Barrel trade may make more sense to them because it's not going to be something to do every day. Most days there's going to be nothing to do. Like today, there's really nothing to do with this trade. What I wanted to do was go back up. But let's look at the 5-day. There's just really not a lot to do. We got around the $42, and then people started buying back into it, hit that $45 resistance level, and then it just kind of consolidated there. There's really not a lot to do here. Now, if the overall market sells off, most likely this will also sell off. But this is the type of trade where you're not going to have something to do every day. The money will come in bunches based on an event in the company, but it's not going to be something to do every day. And I think a lot of people think they want to trade every day till they start doing it, till they realize this don't really work for my lifestyle, but they thought that's what they wanted. But they don't know necessarily how to trade tickers like this.